let's that was the news segment for today. Let's move on. Let's do at least one clip. We have time, we might do another. So for this clip, it's mostly for you, Lace. This is a woman. It's called A to Zen Life is the name of her channel, and she's doing a bit on 10 personal finance lessons that changed my life. And she's kind of a minimalist about how she does stuff. It's minimalism and saving money. Um, but I thought these would be fun to go over. Just, I mean, we're pretty much going to agree with her, but it's going to be interesting because we'll have some disagreements about how to do things. But let's just start with her, and we'll go through it.
Today, I wanted to share 10 personal finance lessons that have changed my life because I don't want it to take you as long as it took me to figure out these things the hard way. And number one on this list is that money isn't just money. It's freedom. One of the biggest aha moments that I had about money was to stop thinking about what I could buy with my money and to start thinking about what I could do with my money. I shifted my mindset away from the idea that the purpose of money was to acquire more material possessions, and instead I started thinking of money as a tool that.
So that's not bad. I mean, part of it is if you want to buy more material possessions, that's your goal, then that's your goal.
Sure.
But
Sure. But you know what? I absolutely love that because that is a mindset shift. We've all been conditioned to understand that money gets us stuff, but we don't stop and think about what we can do, about the actions. And maybe this will get into another point of hers because I'm going into this cold, guys. I haven't seen it. Is I feel like for me that was a similar shift, but it was also related directly to the time is money idea. And people always say that, but they don't often stop to really think what that means.
Right.
If I have my financial streams coming from passive sources, if I don't have as many bills, I actually don't have to work as much, or I could do work doing something I love that maybe doesn't pay as much as this other thing that I don't love, but it pays higher, right? So choices, money is choices, but money also can make your time available to you too. And once you realize that, the choices I made with my money shifted drastically once I realized that every dollar I earned was an opportunity to buy back more of my time if I played it smart, or it was an opportunity for me to buy more stuff that I really wanted. And I can make either choice, but I have to decide what my priority is.
Absolutely.
And mine was time.
Absolutely. And I think the big key there is that I wouldn't say money equals freedom. I would say it equals opportunity. Because, you know, when I think about it, and money being related to time, it's related to your time if you're labor, and you get paid for your time. You know, I used to, like in college, it's like I've been on that date before, and I was a cashier working through college, and you're sitting there thinking to yourself, how many, groceries do I have to bag to take this girl out to dinner? You know, and it's, when you factor it in, it's a lot. Sometimes it's like, okay, that was a whole 8-hour shift gone, and you figure I'm bagging at least, 40 an hour. Now we're talking about quite a bit. So,
how many tables did I have to serve in order to afford this night out and take this person to this concert and whatever? Yeah.
All right. How many floors I have to mop, toilets I have to scrub? Yeah. That's an easier way to think about it. But it's that abstract concept of, if you have more money, you have more flexibility. So if I have the money reserved and saved and I need to take time off work, or I want to take time off work, I can do that. When I decided to go into business for myself, that was the thing is, well, I need to finance that somehow. Right? Where's that money going to come from? Some of it come from loans and stuff like that, but then you got to figure out how am I going to pay that off? So yeah, it just gives you more opportunity in your life to be able to do stuff. So I agree with that point.
Yeah.
Yeah, I think that's a good salient point. So we'll she talks about this for a while. We can go on. Let's go ahead and skip to the next one. All right. This one I'm not sure I agree with, but you can Oh no, I think I agree with her on this one. Sorry.
And lesson number 2 is that marriage can make or break you when it comes to money. This might be a little bit of a controversial opinion, but when you say I do to a person, you're not just saying I do to them, you are also saying I do to their financial beliefs and habits. Experts estimate that between 20 and 40% of divorces are caused by financial disagreements. And it's just common sense that if one person in the relationship is a saver and the other is a spender, that's going to put a lot of strain on your marriage. One of the things I love about my husband is how in tune we are when it comes to money. Both of us grew.
Now, that is, I think, one of those life lessons that everybody should learn, because you're going to learn it one way or the other most of the time. And it's not just marriage.
Right.
If you're in a relationship with somebody who's just a financial drain, you can be absolutely in love with them, and they're still gonna, still gonna damage your life. And you've got to put those goals behind you, or put them off to the side to maintain that relationship. It's gonna start to put strain.
Mm-hmm.
You know, I don't know if you had more to add on that, but I mean, it's
In general, yeah, relationships, I would agree with her in general, will make or break you. It's like you're either on the same page or you're not, or you're going to do the work to get on the same page or you're not, you know? So in that respect, yeah, gosh, I don't know if I'd put that in my top 10 list, but I guess if you have really,
yeah,
in life, if you feel like you really took a bad turn with that one, it could make your list pretty quickly.
yeah, and just it's something I think to be aware of is that when any relationship you have, whether it's a business relationship or personal relationship, any relationship where finance is going to be tied into it, I think you should at least be aware that you're taking a bit of a risk, right?
Right.
Because you are going to rely on that other person, and if that other person, can't get their stuff together, you can't get your stuff together, maybe you should, rethink how tied you want to be. I'm not saying
Right.
you can't be in a relationship. Maybe you're in a relationship and you're like, look, we're not going to see eye to eye in money, so we're just going to keep everything separate.
Yeah.
And I'm willing to forego certain objectives, to make this work. But you have to understand what the trade off is. I think she makes it a little bit more dire than it needs to be. There's a trade off though when you get into a relationship. Hopefully for your sake it's a positive one, but sometimes it's not.
Right. I'll say hopefully it's a good trade-off, where you're mostly in the win column, but yeah.
Yeah. It'd be ideal if you guys could see eye to eye on everything, but that's just never going to happen. I mean,
Right.
there's going to be an argument eventually. So let's get to number 3 here.
Lesson number 3 is that you need to pay attention to both the inflow and the outflow of money. And what I mean by this is the best way to achieve financial security is to balance the time and effort that you're putting into saving money as well as making money. I like to think of it like a football game. You need both a good offense and a good defense if you want to win. Defensive strategies are the ones that help you save money, such as frugal living and budgeting. And offensive strategies are the ones that increase your income and help you build wealth, such as starting a side hustle or investing in the stock market, or even doing something as simple as negotiating a pay raise at work. One is good.
Okay. Wow. I thought she was going to talk more about budgeting initially, but you need to have a budget too. But
Yeah. Go ahead.
yeah, no, but yeah, you need to think about, this is a simpler concept than she's making it. It's what we typically do is we talk about what are your short-term, mid-term, long-term goals, right?
Mm-hmm.
The biggest thing is you need to prioritize what your goals are, right? This is absolute
priorities,
right. This is an absolute goal. Buying the new car isn't necessarily, right? But paying for college is, or I want to get a better education or whatever it is. Whatever it is I'm planning for, I want to buy a new house or something that's an investment over time. That's where you prioritize, but then you have to factor in, okay, well, how much am I going to need to do that, right, for savings? And how much am I going to need to save in the event that, let's say, I'm out of work for 6 months? or something goes wrong, right?
Right.
So that's what she's talking about. The defense portion of it is the strategy portion of saving money. Um, because the offense portion of making money, I mean, that's dictated by a lot of other things that you can't control.
Mm-hmm.
You know, negotiating a pay raise at work might actually hurt your job.
Right. I mean, the defense part, I don't know. When I think of the defense part of personal finance, it's like, making sure you have an emergency savings and you know, have the appropriate type of life insurance, and, you
Right.
don't ignore that open enrollment stuff with your health insurance, and making sure you kind of got that one into place correctly if you have it through your work and whatever. I mean, there are some defensive moves, but yeah, there are lots of offensive ones.
Yeah, but a lot of that has more to do with business and what you're doing in your job, and that's going to vary pretty heavily. Yeah, so I don't know. I mean, I don't disagree with it, but it's also the one thing you can do is you can manage what you save. Um,
Yes.
but that's
Right.
that's always going to be limited by what you make. What you can't
Right.
always control is what you make. You know, and we've done this show for a long time, and we talk about that. Unions and all that stuff. That it's wages haven't gone up, but the cost has. So yeah, I mean, not. I don't know that I'd put that in the top 10 either. It was kind of odd.
Yeah. I don't know if I would, but I mean, the point is valid. I don't know if it would make my top 10. I haven't made a top 10 list for myself, so I don't know what would make it. I'm not sure if that would occur to me to make it, but
Yeah.
yeah, anyway, what else she has to say?
Let's go on to the next one.
At the same time. Number 4 on this list is that it's important to build habits and systems. I know that I've had a lot of bad money habits that I didn't even realize were a problem until something happened to bring them to light for me. Like buying stuff on sale just because I had FOMO and didn't want to miss out on a good deal. Or the fact that I was so disorganized often led to me missing the due dates on bills and racking up expensive late fees. Getting my finances in order meant that I had to work on changing my habits and routines around money and build systems that made it easier.
I think that's a good point.
It is a good point, and it's got a pretty far reach.
Mhm.
Like from how you deal with your mail, how you deal with prioritizing those random, I call them one-off bills, the things that come once per year, like the
Right.
property tax. Like, I've got clients that are like, yeah, I paid off my house, wait, now I have to deal with the property tax.
Right.
Do you have an automatic transfer that goes into a savings? What do you do when you physically get it? Because
Right.
it's cheaper if you pay it earlier. If you wait longer, it actually, you get a bit of a savings by being on top of it. But those are all like, they're little habits, but they really do make a difference. I have a client, they use me as a confession booth sometimes. That happens. Somebody said, this feels a little like money therapy. I'm like, I don't have a designation for that.
No, I don't think so.
No. I mean, but they talk about their feelings and their thoughts a lot, so maybe. But so I ended up being their confessional, and somebody confessed to me that they could have saved $100 if they paid their property tax sooner, but in the shuffle of their organization and systems, they didn't adjust to having to take care of that on their own.
Mhm.
It's a new thing, and it's a habit that hasn't happened yet, and how they deal with taking care of it on their own. It got paid, but $100 more expensive, and they're all like, I don't sneeze at $100. $100 is a decent savings, so they were irritated.
Yeah. Well, but there's also a point here too of you need to so little things start adding up, and that's how you get nickel and dime to death, right? It could be something as simple as you're a contract employee, not a W-2 employee, and you don't plan for your taxes. So end of the year, now all of a sudden you owe whatever it is, 15% in FICA tax, plus you owe your federal tax, plus you owe your state tax. Now you owe whatever it is, 24, 25%, 28%, and you didn't save any of that money or plan for it, or you didn't pay it monthly or quarterly. I've seen those things add up really quick, and now you're in a ton of debt.
Right.
Really not through any ultimate fault of your own, but because you didn't prepare, didn't know enough to prepare ahead of time or think about it. Right.
Right.
You know, and those can be solved by, like you said, having adequate emergency savings. Because you'd be like, "Oops, I screwed up. It's a good thing I saved this money." Right? Because you don't know what's going to happen sometimes. Sometimes your car breaks down. Sometimes you got to repair something in your home. I mean, shit happens. But yeah, no, but I think if you get into, just in general, just you get into sort of good habits about, thinking about things like, okay, I could go buy the new pair of shoes, right? But then I won't have that money available if this happens or something else happens, right?
Mhm.
But then it's like, okay, but I have plenty of money in case that happens. Okay, now I can afford to go buy the new pair of shoes. And it's not a devastating thing, right? But I can see that too. And I've had clients before. It's like, well, I buy everything on sale. And it's like, yeah, that's how they sucker you in.
Right.
Is they mark it up a ton and then they tell you it's 50% off. They're still making money, right? But then you end up,
Absolutely.
once again, you end up consuming and buying too much shit.
Hmm.
Tell you right now, if you walk into your closet and you're like, I've never worn this, you're probably buying too much shit. Right? So yeah, I thought that was a good one. I think that's a good, just generally getting in. Go ahead.
Or not being thoughtful with your spending. I want to add that to
Yeah.
what you just said because I don't buy too much stuff, but I've taught myself that most of the time I don't buy something as soon as I see it. I actually tend to, wait a day or two and then go back for it. I've even done that on vacation, and I've been like, wow, I'm really still thinking about that thing. I literally am going to backtrack to that place and get that thing.
Right.
But I don't like. I'm also a bit of a minimalist, honestly. I don't like having stuff. I spent the money and the space in my closet or cupboard or whatever apartment. So I've spent the space and the money, and I'm
Right.
holding onto this thing. And it's not a thing I use. Like, that doesn't feel good to me.
Right. Right. And it just feels like it was a waste. Yeah. Well, let's go ahead and move on to the next one. But yeah, it's still a good point. All good points so far.
To track and save money. And speaking of saving money, number 5 on this list is to always live below your means. Most experts.
Yeah. So that's a key point.
Yeah, I mean, that's,
You should.
gosh, I mean, if you're going to order them, that might be like freaking rule number 1, because if you can stay below your means, you have so many choices with what to do with excess, whether it's fund or invest or throw in a savings or a kid's college fund. I mean,
Right.
that's key.
No, absolutely. Absolutely. But yeah, that's the thing about it is sometimes when you're, I mean, if you're doing like business and I'm investing in a business, there are times when, you're above your means, but it's not you, it's the business that's above its means. So you want to make sure
Yeah.
that if the business sinks, you're not handcuffed to it. Right.
Right. You don't want to be handcuffed to an anchor that gets tossed overboard,
Absolutely. So there's that, but I mean, when you're talking about your personal life, you want to set a budget and stay within it. Right. If you can't, that's when people get into troubles. When you start overspending, now you start owing, and you can't make up the difference because you're not making enough money, and that really screws people. I think this next point is kind of the same point you made about the marriage thing.
That you need to be careful about who you let inside your circle of trust. This is one mistake.
Yeah, I think it's the same thing.
Wait, no, I want to hear what she has to say about it.
Sure.
That I had to learn the hard way, not just once, but many times over and over again. I used to be a huge people pleaser, and there were many people who took advantage of me, both emotionally and financially. And there was even one girl who I once considered to be my best friend growing up, who stole a bunch of stuff from me, including jewelry, money, and even my clothes and underwear.
Oh,
Yeah. Well, I think it's more of a, it's like the marriage thing. It's you got to be careful who you connect yourself to financially, and realize there's going to be a risk there, and vice versa.
right. It's always a risk, but with friends, it can show up a little differently. I
Yeah.
think it shows up a little differently. Um, I like to buck the trend that it's impolite to talk about money. I decided, screw that.
Right.
Keeping money too quiet is not
Right.
good for a lot of people.
Yeah. Well, I mean,
But that being said, there's something to be said for if people, gosh, this goes directly against it. There's something to be said for, certain people. You got to be aware of who not to say things to.
right.
While I'm not all about keeping money super silent, because it's how a lot of people don't know anything about
About
money
money.
because nobody will talk about it.
Right.
But you have to make sure the company that you're keeping and who you say what to, because there are some people in your life that if they find out you actually have an emergency savings, their emergency magically somehow likes to become your emergency.
No,
And it's not to say you can't help other people out, but people, you can get drained from people financially, and you have to be careful of that for sure.
absolutely. And like I said, I think it's okay to say, look, be private about money to a certain degree, but also be realistic about when you talk to people about what the expense is to you, so they understand that, right? I'll give you like a real simple example. It's not too personal, but like when I was in college, it's like my friends would come over, and they'd raid my fridge, and you're sitting there like, after a few times that, it's like I didn't make that much money, and it's like I'm out of food, and I didn't eat it.
Right.
So I finally just told my friends I can't afford for you guys to be doing that anymore. So the rule is, if you want to come over, bring something with you. We'll just potluck
Right.
this from now on, and that worked out really well. But
Right.
but that's just one of those things. But I didn't tell them how much money I had or saved, or because then if you do that whole thing, well, look, I can't afford to do this anymore, and they're like, well, you got $10,000 in the bank, you can afford it. It's like, well, that's not what that money's for.
Like, but that $10,000 isn't to feed all of your broke butts. That $10,000 is to pay my tuition, and if my car breaks down, and if my whatever, that's what that's all for. It's not for like, would burrito have it?
Yeah, no kidding. Well, let's do one more. I mean, they're all kind of getting to be the same here. Oops. Hang on.
Lesson 7 is that it pays to cash in on the power of delayed gratification.
You just said that.
Yep, I just said that.
Yeah.
Yeah.
Well, I just wanted to get to this last point because this is more how Lacey and I are trained to think about things. And you can look this up. This is from the CFP board. It's the Certified Financial Planning Board. And anybody can download this. This is public. Guide to the 7-step financial planning process, right? And this is basically all she's been talking about. She's just been doing it in a weird order. But this is it. Let me zoom in on this a little bit so it can be a little clear. So, step 1, when I meet with a client, or Lacey does, you understand their personal financial circumstance. So you're trying to figure out where are they kind of at currently, right? Then the second step is trying to figure out what are their goals, what do they want to achieve. So identifying, selecting goals, prioritizing goals is another term for it. But what do you want? And let's get them in order, right? To what we want to achieve first and last.
First, what are they at all? And then let's try to rank them to the best of our ability.
Right. Then, of course, analyzing clients' current course of action. So what are they doing now to try to get there? And where can we make improvements? And that's where you come into step 4, developing the financial plan, right? And then step 5 is when you recommend the plan. This is the plan. Does that work? Do you like it? If they don't like that, then you just redo step 5. step 4 and 5 again until you get it right. And then step 6 is you execute the plan, but you got to stick to the plan. And then step 7 is just make sure that you're sticking to the plan. And then you update the plan because things change in their lives and you start with 1 again. Then you just keep going around this wheel over and over and over again, which is all she's really kind of talking about in a nutshell. I mean, she's not doing anything ultra creative here. I think it's important for people to understand, but that's really what we're doing. And when we're sitting there like, what's your current circumstance? What are your goals? What is, do you have a budget? Are you invested? Do you need to be invested? Are you trying to buy a house? What do you need to save to do that? How much do you make? What can we cut? Where can you get more income potentially? If that's an option, maybe it is, maybe it isn't. But that's really all we're doing at the end of the day. It's not like it's an ultra creative, mystical, magical, just listen to us and you'll be a millionaire bullshit. We don't do that. It's basically just get organized, get a plan, stick to the plan, and be disciplined about it. If you can do that, you're more likely, I'm not saying you're going to be like ultra successful or rich, but you're more likely to not run into problems.
Right.
And you're likely to have more options and more flexibility with your money because you're more disciplined about how you're doing everything. And you have a plan, which I can tell you right now, and Lacey will tell you, for a lot of people, just having the plan is a huge fucking relief. I mean,
right.
Because most people just sort of going through life, chugging through, and they don't know any of this. And it's all really scary and frustrating. And you shouldn't be scared or frustrated because it really is just the 7 steps. And you can download this online from the Certified Financial Planning Board, just CFP board.
But where you are scared and frustrated, what I want to add to that, because people don't think about it enough, is be willing to go there with yourself. And when I say go there with yourself, to be willing to dig into your own fear and frustration because they're coming from somewhere. Mm-hmm. And you need to actually sort of stare them in the eyes and sort of figure out your own behavior. Right. You need to be more interested in your own thoughts, feelings, and behaviors with money than anybody else. Right. Otherwise, you won't do a good job with that plan.
Right.
Those things have to work together. Just like you have to have goals, you have to be more interested in your own behaviors and what makes you tick with money, because they also flow into what your goals are. You don't want to stand in your own way.
Right. And money's not the most important thing in life, but I got to tell you, it can get you some important things in life if you're smart with it. And that's just the nature of our system. Until we live in utopia, this is what we have to work with. So that's kind of it in a nutshell. We're running out of time here. Do you have any last thoughts you want to throw out there? I thought that was good.
No, I just have to say, you know what? It was refreshing listening to someone where, we more or less agreed with what they had to say. Like, we might make our list a little differently or whatever. We maybe wouldn't put certain things on a top 10, but, we were more or less aligned with the ideas. And so it's nice to see that there's some content out there that, that feels like it's really valuable for people. So,
well,
I like that.
No, and I give her credit because I when we first started watching, I looked at it and a couple things, and I'm like, basically, she's just going through the financial planning process. The problem is it took her 20 years to figure it out.
Well, you know what? That's why we're here, and that's why she does what she does. That is why people who really do this, right, and are putting out content. It's why we're putting out the content, is because we want to help people to not have to take 20 years figuring it out. Or if it took you 20 years, let's have it be 20, not 30, right?
Right.
Yeah.
And help you get better organized. Well, cool. Well, where can everybody catch you, Lace?
Well, as always, you can catch me at mysensewithsense.com, where you can find information about courses, workshops, and articles I've written. If you have questions about those or want further information, email us or send us some clips, something you think we might agree with. We've had a few people send us some things we might agree with, and that's been fun,
Yeah.
or something you think I'm really going to dislike. We'll take those too. If you have anything like that you want to send us, email us. And Duncan, where should they do that?
You can email us at gossipfinancead@outlook.com. If you want to come on and challenge us, we keep asking and everybody keeps running away. I don't know why. We're not scary. we're
No,
not,
we're nice.
we're not going to yell at you. Anyway, thanks everybody for watching, and we'll catch you next time.